Hello, investors. This is Todd Thomas, Associate Portfolio Manager with Revere Asset Management, coming to you from Boca Raton, Florida. Today is Sunday, March 2nd, 2025 at 9:30 a.m., bringing to you the Revere Roundup Weekend Walkthrough. Starting with a GROTECTION gauge, the leadership is still in protect mode. Not much improvement there at all. We did have a rally on Friday in the major indexes after testing important levels. However, leadership got decimated. The follow through continued through most of last week. Both major indexes are below the 21-day moving average, so we are still in protect mode there. And both indexes are currently below the 50-day moving averages, so we continue to have a down red arrow there. However, on Friday, we did test the 200-day moving average on the NASDAQ, and the NASDAQ reversed and closed green. The S&P is still well off its 200-day moving average, but fell further below the 50 for the week. So overall, a volatile week. Throughout 2025, Fridays have been bad, but this past Friday was up 1.59% after a reversal on a gap down open. So this was the best Friday in February since 2022. Despite growth leaders being weak, however, 283 S&P 500 stocks are beating the index year to date, and 9 of 11 S&P 500 sectors are also beating the index. And let's go to actually, I want to start by going through a few slides before I start the indexes. These slides kind of show some unique things that also have taken place over the last week. First of all, let's review the seasonality for the general year. And so far, the seasonality has played out fairly well. You can see that typically January is a choppy, gets off to a pretty good start, closes flat. February, the typical seasonality is you spike mid-month and then close down on the month, and we did exactly that this year. Now for March, getting a more granular look, we usually start the month off strong the first week or the first few days, fall off into mid-month area, and then after the 13th of the month, we typically close strong the second half of the month. So we'll see. We probably could see some follow-through day or some follow-through action based on Friday's positive reversal, which will show on the indexes. Here's a quick look at year-to-date performance. This was as of Wednesday or Thursday of this past week, but for the year, gold has been very strong. Tobacco has been very strong. You can see a lot of these are defensive in nature. Health information, pharmaceuticals are rebounding nicely. Steel on tariffs are rebounding. Healthcare facilities, REITs, medical devices, and drugs, pharmaceuticals are doing well. Waste management, again, defensive in nature. And this past week, we saw a lot of strength in the insurance and the mortgage REITs. So in general, here's your leadership this year. Here's your strength, and it's primarily in more defensive type stocks. Here's another interesting chart I came across this week. This shows really how the U.S. is valued relative to global names, not including U.S. companies. And you can see that historically, we peaked out in the Nifty 50 bubble in the 60s right here. And then the internet bubble, we peaked out here. But really, since post-financial crisis, the U.S. has just dominated the world markets to where we've gotten well above any of these past extremes, and we're sitting up here. And the reason I bring up this chart is because over the past couple of weeks, we've seen a lot of outperformance in some of the European stocks as well as the emerging markets. Also, another interesting phenomenon this week, the AAII bearish levels approached historic levels where we typically see um, the market panicking and bottoming. And we all know that we're very close to all-time highs on the S&P. So this is a really unusual situation. All these past instances, were bear market bottoms or here the midpoint of a global crash in 2008, as well as the 2022 bear market bottom. However, we have these unprecedented levels of individual investor fears not seen at a top or near a top in the market. When I say a top, very close to the all-time highs. And this could be the result of many different things, but it's an interesting phenomenon. Yet the NAAIM, which is the active managers, is still at 87.87% exposure. So professionals are still very highly invested, which is not confirming this. So this is just a few slides I wanted to show. Going to the indexes, starting with the month, since we're at the end of the month or starting a new month, the S&P closed down 1.42% for the month of February. For the week, we closed just below the 20-week moving average. So, basically right there, but really the first close below the 20 weeks since this whole bull market started here after this correction back in fall of 2023. So we closed just below the 20, but still very close to kind of the levels we've been trading at here. We're still holding the support area, and we had big volume on Friday. So positive close to the week. NASDAQ composite bounced off its 40-week moving average, but closed just slightly above 30-week moving average. A lot more weakness there on the month. The NASDAQ closed down 3.97%. The NASDAQ the Q equal weight closed just below its 50-day moving average. Still trading just right around its above its 30-week, but below its 20-week. RSP, even though the 50-day moving average is declining, it's managed to close the week very strong above the 50-week moving average. So that's a decent sign there. IWM bounced, but still below the 200-day moving average, definitely the weakest index. Let's look at where that closed the month. Down 5.22% on the month. Mid caps. Monthly, the mid caps closed down 4.21%. And rebounded also just to close under the 200-day moving average on the daily. VIX managed to close below 20, but slightly elevated. Surprisingly, despite the weakness through Thursday on NVIDIA's numbers, we still never got higher than 22, which is not that elevated. Dollar was up on the week, 0.89%. Looking at the monthly, the dollar closed down 0.7%. 30-year bond yields continue to drop, and we're down 3.28% on the week to 4.5% on further economic weakness and fears of slowdown. 10-year is right on the 40-week moving average, closed down 4.2%, and the last was 4.23%. And that also broke the 200-day on the daily. So clearly continued fears of a slowdown happening here, shown in the bond markets. The TLT is This is the bond long ETF. And you can see here, this has broken through a 5-month downtrend channel here. So this shows that bond prices are rallying. So this is quite strong. Also, China had a down week. We talked about this, down 2.79%, which is a healthy pullback after strong outperformance on the year so far. Bitcoin had a very bad week, down 11.16% on the week and down 17% on the month. Semiconductors, bad week, down 6.9%, led by NVIDIA this week. On the month, we've been in this very tight range here throughout the month. We did close below that, and we're down 4.41% on the month. So semi is definitely showing some weakness. Below all its moving averages, well below the 200-day moving average. And this is just another chart of the SMH also showing that weakness. One of the strongest sectors showing up right now is the XLF. This is the financial ETF. After tight area, closed the week up 2.8% and the month up 1.38% to basically all-time monthly highs. And that's it for the indexes. Let's go to the Mag 7. All right, NVIDIA. Let's look at NVIDIA starting on the month. Believe it or not, NVIDIA had a positive month, up 4%. You would never guess that. But currently the stock, we've talked about it a lot in all of our daily reviews and podcasts, clearly displaying a change of character and down 7.07% on the week, below all the key weekly moving averages for the first time since it started rallying back here in 2023. So definitely a change of character. We've also gone over the deceleration in earnings from 6 quarters of triple-digit earnings and sales to now still very robust, but double-digit. Just want to highlight some of the keys on their earnings report. Overall, they dove this week on lower gross profit margins. They came in at 73.5%, and this compares to 75% in quarter 3 and 76.7% in the year earlier. They expect gross margins to slip to 71% in the current quarter, and this is based on Blackwell ramp-ups. But they are forecasting a return to the mid-70s later in the year. So this might not seem like a big deal, but whenever profit margins are dropping, there's a big leveraged effect on profitability with increasing profit margins and a big anti-leveraging effect with decreasing profit margins. So it's a big deal when companies are not only declining in their profit margins, but also decelerating. And NVIDIA has a challenge here. It did have a very strong rebound on Friday and closed basically at the highs of the day, but still below the 200-day moving average. So Magnificent Seven has been very weak this year. Apple's been hanging in there, slightly down on the week, but still decent. Microsoft is another stock that's down on the year. It's still in this 18% consolidation. But you can see here, it has a lot of support right around this 385, 386 area on up to 388. And this is, today it made a low, on Friday it made a low at 386.57. So it did hold this big support area. And this past week on the podcast, I talked about this kind of head and shoulders pattern that Microsoft's developing. So after kind of this bearish wedging action here and this break here on the weekly, you can see Microsoft is on thin ice and on watch to potentially break the neckline of this giant head and shoulders pattern that's been in now for about 9 months. So that is definitely a weak stock to watch. It could just be in a consolidation and buy more time, but not looking great here. Meta closed the week down 2.25%, held its 10-week moving average in its 50-day, one of the strongest stocks in the Magnificent Seven. Amazon down 2%, below the 10 and 20-week moving average, also below the 50-day, but above the 200-day. Tesla, pretty much the weakest Mag 7 stock. Very weak month, down 27.59% on the month. Held support on the weekly. This is another one that I showed on the podcast on Friday that has been in this big inverse head and shoulder, where you have this left shoulder, head, right shoulder, and had this big breakout through that area of resistance post-election. So if you go back here and look at post-election breakout, which was also an inverse head and shoulders breakout, this stock came exactly right down to this very important support level and bounced. And it was also the 200-day moving average. So we will see if Tesla can hold this 200-day moving average as well as this, this 40-week moving average, but definitely very weak and down big this month. Google also broke all its key weekly moving averages. This stock is down 16.54% on the month. And you can see it's broken all of its weekly moving averages. So definitely a bounce on Friday, but one of the second weakest member behind Tesla. And that's it for the Magnificent Seven. I thought it would be interesting to go through very quickly the biggest losers for the month, February, since we happen to close right at the end of the month. So just very quickly, I'm going to go through a list of names. Trade Desk down 40%. Deckers down 21%. Illumina down 33%. mRNA, multi-months of downside, and another 21% there. Rocket Lab down 29%. Tesla, we talked about, down 27%. Square on earnings down 28%. Skyworks Solutions down 24%. Kava down 29.6%. MicroStrategy down 23% on the month. Coinbase 25.9%. Datadog 18%. A-Lab 26%. On 19.4%. Toll Brother and Housing 17.8%. Twilio down 18.18%. Builders First Source 17%. Reddit down 18.9%. GoDaddy down 15.5%. Blue Owl 17%. First Solar down 18%. ANET 19%. Instacart down 14.8%. Marvel 18.6%. Vertiv Holdings down 18.6%. VST down 20%, and CEG down 16.4%. And finally, New Holdings down 18.8%. So those were kind of the biggest large cap losers for the week, or I'm sorry, for the month of February. Let's go into the biggest winners now for the month. Believe it or not, SMCI is the biggest large cap winner of the month, up 39%. HIMS, despite a very volatile week, still up 21% on the week. In China, XPEV, electric vehicle maker, up 41% on the week. On the month. BABA up 34.07% on the month. And also notable with BABA is this is the second biggest monthly volume in history, and this is on a short month in February. So this has eclipsed its 2014 highest monthly volume levels and just shy of the 2022 highs. So this is pretty notable. And we know this has been true by following the Chinese stocks. Dutch Brothers up 26% on the month. LI, another Chinese auto, up 31%. BEKE, 27%. 28% for FTAI Doximity, up 28%. This is on our watch list. T-Mobile, very strong stock, up 19%. Gilead up 19%. Budweiser, Anheuser-Busch up 19%. Yum Brands, very strong multi-year breakout, up 19.82. Philip Morris continued follow through on earnings for the month, up 19%. Intel up 19.8%. Excelis earnings breakout up 19.82 for the month. Tapestry, the maker of Coach, Kate Spade, up 19.82%. Expedia up 19.8. Eli Lilly, nice rebound, 13.5%. AT&T defensive dividend stock up 15%. So those are your biggest winners, and you can see there's some defensive names in there, a lot of China, and some growth leaders as well. Finally, let's go through the watch list. Despite the leaders being very weak, I've got a pretty big watch list here for the week. Again, not all of these by any means in viable positions. BABA is quite extended. It's rallied up 40% from its cup with handle breakout level, but still, as we talked about, that monthly is very strong, and this is a big new stage one Weinstein stage. Yeah, definitely a new stage two in that stock. Mealy earnings breakout, JD earnings this week, definitely showing some strength here, trying to break out of this big kind of double bottom action, but strong. So we'll see how earnings come out on that. FUTU, a pullback on the week, but strong. WGS, definitely on our watch list, and very strong week, up 7.33%. Eli Lilly building this big stage one cup, extreme strength here. Also, as the FDA takes some semaglutides off the shortage list, this is acting very well as many new drugs. Take-Two, one of my favorites here, with several new games coming out this year, including Grand Theft Auto, the latest version. 4-week tight, looking at the daily, extremely strong action, couple days below the 80 MA, but really continuing to hold above the high volume close level here. Let me draw that line a little lower. So very, very, very strong action there. In the biotech area, AXSM, after a very strong breakout last 2 weeks ago, 3 weeks ago, still very tight and strong. INOD, another stock on the list here just because of the heavy volume here on the weekly. Just strong multiple gaps here. Basically huge gap on earnings, then a big consolidation of 43%. Another earnings gap through pullback on the weak market, held the 21 EMA. Look for this thing to settle down, but on the watch list, not really actionable just because of the volatility and the high average true range, but very notable strength here all throughout this period here with a volume and this huge digestion taking place. Expedia, very tight post earnings, holding up well. DoorDash, definitely one of the strong sales and earnings grower here on the list. Penumbra on earnings last week, traded inside. Doximity extended, however, still holding above the 21 EMA here after a big pullback. So you want to keep an eye on some of these. Spotify, late stage, big move, but still acting well. HWM still grinding higher. TraderWeb, new merchandise here after this week's earnings, still almost 100 million on the average daily volume, but a little bit shy, but traded very nicely and closed the week on the high through this little tight VCP area. Definitely good earnings, 23%, close to 20% earnings and 23% plus sales. So this looks pretty good. Very, very nice and tight, stage one based. Monday, you know, able to recover the low of its gap. I still like the looks of this stock. Excelis, nice tight area breakout post earnings here after a shakeout. That's in the biomed area. T-Mobile, not really viable, very extended, but very strong. Gold, 3-week tight on RGLD. CRS in the metal area. Non-technology, really nice chart here. Holding up. You had an earnings shakeout back here. Tried failing below the 20 and then had this really nice pocket pivot high volume area that kicked it up into this area. So I've got an alert set at the highs on this, and I'm interested in potentially taking a position in Carter. Robinhood, rough month, down 3%, but still, we find this to be one of the innovators in the fintech and brokerage space. Very strong earnings and sales and new account growth. Definitely tied to crypto, and I think pulled back to the 20 on the pullback in Bitcoin and the crypto, but still holding the 50-day moving average, and going to watch this for it to set up again. Dutch Brothers, outstanding. Again, 26% on the month. Old all-time high back here post IPO was 81.40. So, definitely makes sense that it pulled back off of this old high, looking for it to build up and still trading above its 80 MA. So you cannot deny the strength in Dutch Brothers as a potential new leader. Halozyme in the biotech area, just a steady weekly grind here. Decent post-earnings shakeout to the 21 and holding pretty tight here with good sales and earnings numbers. Nutanix, new merchandise from this past week's earnings gaps in the enterprise software area, broke out, held, and currently trading above the high volume close. So this is definitely on our watch list. CBRE, as interest rates are coming down, this is one of the leading property investment management companies, commercial real estate companies, and after trading very tight, the market kicked it down to the 10-week moving average, and now it's trading right back up. So if interest rates keep coming down and commercial real estate can stabilize, this looks pretty good to me. And it's just a name I'm watching with a lot of accumulation days here, within this and then last Friday. So liking the looks of that. Insurance, a lot of strength there. Not sure if it's an area we're really interested in, but there were quite a few names that broke out of bases in this area, in the insurance area. AEM, another 3-week tight in the gold area. AGI, another gold stock, trading very strong. AIG, another insurance company breaking out of a stage 1 base. This is a long 30-week base. Slower name, but looks good. In the European banks, this is a British bank, very strong. You can see the outperformance here. 3M, strong breakout of this tight post earnings gap breakout base here, looks good. Alaska Airlines, trading above its averages after a little pullback. One thing very nice about Alaska Airlines, one of the few stocks showing very strong earnings and sales growth. and not really being impacted by the weak economic outlook. Berkshire Hathaway strong breakout, very heavy in insurance stocks, but you can see that had a strong breakout last week. Embraer, Brazilian manufacturer of aircrafts, showing a strong 26% increase in 26 for earnings. Was able to break out on big volume on the earnings date, so it's another very strong stock. GE in the aircraft engine manufacturing area, also trading very tight. Yum China, watching this stage one base develop here. And Starbucks continues with their new ex-Chipotle CEO, who is cutting jobs and changing directions for the company. Garden restaurants staying strong despite the weakness in Cava and some other growth restaurants. Brinker, owner of Chili's, also showing strong action. So really, despite a lot of weakness in the economic outlook, it looks like most of the leaders that are getting hit are really in the AI data center area more than anything else. A lot of the areas that should be going down with weak economic growth are showing strength. This Elastic had a very strong reaction to earnings, and it's coming up against this 118.84 area. Strong week there after some tight action here. Capital One Financial in the credit card area, another area that's holding up strong despite weak economic data. Fiserv, payments company, acting well. UBS in the European banking area, brokerage area, looking strong. RTX in defense broke out last week. In the pivot zone still. U.S. food, defensive stock, hanging in there. Hess midstream, strong. Cisco, slow stock, pays, a big dividend. So the dividend stocks are strong. And finally, Royal Pharma, which is a stock I've been looking at and showing a lot of heavy accumulation after this big announcement that they're enhancing shareholder value. It hasn't looked back and it's trading strong volume here. Corebridge in the financial area and life insurance. XPEV, Chinese EV manufacturer. Again, very strong breakout on the monthly after multi-year declines. China has a very good fleet of electric vehicles, and you can see sales are increasing rapidly, still losing money, but that's excusable if sales are rapidly increasing. HIMS, despite a very volatile week on the FDA's announcement of, not allowing compounders to produce semaglutides in a pullback really just to the 50-day moving average and hold. Still extremely strong numbers. Yes, they're going to have to probably phase out some of their production of these semaglutides by the mid part of April, it looks like. But they still have other alternatives, and I believe they can still compound in special situations. So this company's leading in this area with several solutions for, everything from ED to hair loss, a lot of different types of followings here with this company. So still very strong on the month, still up 20% on the month, and still, down 8.5% on the week. So overall, we probably just need to see this thing settle down, but it's still a leading stock. And that's it for the watch list. Just to wrap up, let's look at next week's economic news. We have the job numbers coming out on Friday. Going to be important to see how that looks, as last week showed jobless claims increasing unexpectedly. Keep in mind that the DOGE cuts will not show up until March or April, so we're probably not going to see anything there. The ISM services index will provide an early read on economic growth in February. So, interesting. Still many stocks doing well this year. It's really just the growth leaders that got clocked over the last 2 weeks. So anyhow, brings this weekend's review to an end. If you have any questions, please feel free to email me at todd@revereasset.com or follow my Twitter handle at toddmichael70. If you have any questions and would like to become a Revere client, our phone number is 855-REAL-WEALTH. Call and ask for Don Vandenborg or Dan Stewart. And our website is revereasset.com. Thank you very much. Have a great weekend.